his view on this important process just in a little bit later in the second half of this webinar. Before we start actually diving into this topic, by the way, please be aware of the fact that the webinar is intended for a global audience and may not be suitable for everyone. To find out if it is okay and suitable, please take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity, also for other conditions and details. Furthermore, trading for exchange is considered high risk and may not be suitable for all traders and investors. Together with other financial products, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with that disclaimer or this disclaimer. Once again, welcome. This is hosted by Admiral Markets, so this material and educational topics, we can thank the possibility, of course, of having this webinar thanks to Admiral Markets, and we're also glad to show you something else, this special deposit bonus, which is valid for the entire month of March, and basically works like this. If you find it interesting, you look at the details and the conditions, and you either like it or not. And if you do, then you can sign up, and whatever you basically place on your first kind of initial deposit, you will get a bonus connected to that. You can use it as margin, and eventually, if you get enough volume within a certain period of time, you also get that actually as part of your capital. It does become then your capital. So that's a deposit bonus for your extra credit that you add within this month of March. So that's very exciting. Take a look. The percentage varies depending on exactly how much is added, so that will depend from trader to trader. Take a look at that. I'm sure it's worth your minute or two attention to see if that is something for you. All right, so let's start. How to start in Forex is the first question. And basically what I'm going to do in the upcoming 27 or so minutes still, until Ned will take over, is kind of walk you through how I think a trader should tackle and start the process of Forex trading. But mind you that basically even traders that have been trading for a while, you might still want to keep an eye on these points and basically kind of use them as a starting guide when you restart a new trading year. I think it's good to kind of go and walk through these steps, go through this process. Of course, not every single step will require the same amount of attention as it did, X amount of years ago, depending on your experience. I mean, let's face it, if you've gone through this 10 years, then obviously the 11th time will be a bit faster. If you've done this 2 times, then obviously it will still take a bit more time, and if it's the first time, it's going to require more attention. But still, I think it's good as kind of like a yearly refresher to go through these questions and see if anything is new, anything is updated, should I change anything, and I think you'll find out why when we go through these points. So in that regard, I think it's valid for everyone in a way. So first step is the motivation. I think that basically is kind of the core, the starting spot for anyone actually. I mean, trading obviously, but I think if you want to start basically any endeavor, if it's in business, if it's in sports or whatever, arts, whatever field that you want to excel in, I think that deep down we have to, of course, understand where is the motivation coming from, where could we expect maybe some problems down the road, where can we expect to get that extra motivation to keep pushing towards our goals. Because if there's any one kind of shared denominator, if there's any one common characteristic that connects people who have very good success in their respective fields, they have this very strong kind of driver, right? So, I mean, other characteristics could vary from person to person and from field to field, but often enough, this particular characteristic is shared among those that make it to a good level in their topic, right? So we need to know why we want to succeed. Why do we want to achieve? And where's that motivation coming from? We basically have two motivational sets. External is kind of something that is within us, so that we basically want to achieve it. So that could be, for instance, independence. The fact that we don't want to go to the office every day. That could be a very big motivation. But for instance, only thinking about money, just purely the money, is more of an external. The other way around. Sorry, that's more external. And for instance, driving, not going to work for a boss. Let's say that's more internal. So there are a lot of things. Obviously, I'm not going to dive into all of these, but I mean, there's a ton of things that we can get motivated by. Early retirement, that's more internal. More resources during retirement, that's more external because you're trying to improve that. So that's more, I think, more external. Not that I'm an expert, but that's what I would say. Full-time business as a Forex trader, I think that's more internal. Resources as a side income, it's more external. Ability to study, that's internal. The willingness to study, the willingness to learn and master something, that's all internal. But more resources for the family, that's more external. The dream house, that's external. All right. The desire to succeed in trading, or the desire to tackle trading as a game, or as a not as a game, but the desire to win this kind of battle in a way, or to just win this endeavor is also internal. To become the best analyst, that's also internal. So these are all kind of things you can think of. And yeah, moving on. From there on, I think it's good to take a look at what is now. Just write down, place into framework what basically are the current conditions that we are facing. What is reality for us? And that obviously will depend from trader to trader. This is going to vary highly. I mean, obviously, if, let's say we have trader A and trader B. Trader A has 100,000 euros ready to trade with their as a trading capital, and trader B has 1,000. Well, obviously, there's going to be some difference in what they could expect to earn in cash value. Maybe not in percentage-wise necessarily, but in cash value. So there's going to be a difference in there. Things that we want to keep track of: income and expenses. Where does that income derive from? Is there any way to alter that balance so that we could save? Of course, more ultimately, the difference between income and expenses is our positive cash flow, hopefully positive cash flow, which of course we could either reinvest or save for trading capital later on, etc. Or if you already have a sufficient trading capital, maybe in a bigger trading capital or in other assets, right? So that's where we can derive it from. That's where we get the difference is important. Some people earn a lot but spend a lot, and they're not building on wealth. The difference to get to a situation where we have wealth is basically passive assets that are generating income for us. How can we get those assets? By basically acquiring enough money to buy those assets, obviously, or at least some money, and then the rest maybe perhaps to loan. Now, I wouldn't recommend that with trading, by the way, but perhaps with other assets, that's okay. So wealth building derives from passive assets that are generating income. For that, we need more income than expenses. So for that, we need to get as much income as possible, but also cut expenses. Increasing income but increasing expenses doesn't get us to that situation. We need to do both in a way. To a certain degree. So then we have other things you want to keep in mind, like where does that, as I said, where do I make expenses come from? Where do I spend where are my expenses going to? Where are my income coming from? What is my personal situation regarding IT, internet? That should be, I guess, fine for everyone. But do I have space at home to work? Do I have enough resources? Time commitment, in terms of time commitment, for instance, I mean, demanding job is maybe very good for the income side of things, but not maybe for the learning side of things. We definitely have, at the beginning of one's trading career, a lot of time needed for learning and studying. That will become a bit less as the experience increases. I always think that a bit of time for that is a good thing, but obviously the emphasis is more at the beginning years. So what is our beliefs about the market? What is our mindset about the success, the potential of our business? So we note that down. Then we want to take a look at basically strength. This is called the SWOT analysis. So what it basically takes is the first letters of strength, weakness, threat, and opportunity. And what it does basically is look at your current situation. What is the strength? What is the weakness? What is a threat? That's external. And what is opportunity? That's external. So internal is what we can influence ourselves. What can we impact? And the external thing is something that we can't do anything about. Here's an example, for instance. Strength could be someone who has a lot of time. That's a strength because we can allocate the resources to learn and study. But the weakness, for instance, could be a lack of time and a lack of experience. Maybe the trader has only looked 3 months into trading and has a lower start capital. The opportunity could be, for instance, that they have already purchased an educational course, so they're fully engaging and learning from the trader or traders, and has an opportunity to maybe get a better paid job. For instance, those could be the two opportunities, but the threat connected to that better paid job maybe is there will be less time to learn. So, this is how you want to look at it. And when you combine these things, when you combine strength with opportunity, you can try to create ideas that could maximize this analysis. So, for instance, maybe not so good example in this case, but the idea could be, okay, take the paid job to acquire a bit more capital, but then after 2 years, move to other job that requires less time. That could be an idea that combines these kind of strengths, weaknesses, opportunities, and threats to a plan, or to multiple plans, or to multiple ideas. This just to give you an idea how you can use that. So when we have done that, we basically are set with understanding where we are at this point. And then we're going to take a look more at the future-oriented. What we've done so far is look at past and present. And now we're going to take that info and apply it and take it a step further and think about how we can evolve in the future. Where do we want to head to? Because we need a dot on the map to know that's the goal for us. That's the direction we want to go. Because without that directional guidance, without any aim, we're aiming at nothing. We need an aim, we need a focus, we need a target so that we can measure if we're there, if we're going that direction, and to know that we're on the right track. Otherwise, if there is no track, we'd just be wandering, basically blindlessly wandering around, and we definitely want to have a clear goal in mind. So the SMART goals, basically, it's an abbreviation. What we want to do is have that major goal, but then break down that goal into achievable steps. Because if we have one major goal, it's going to be difficult to reach that. Why? Because we don't have a clear understanding how to get there. We could have a goal to say, okay, I want to become a millionaire, but it's so big and so large that it's not doable to use that goal from a day-to-day or week-to-week or month-to-month kind of perspective. It's maybe a goal we have down the road, a few years from now, and it doesn't tell us anything about what is important today or tomorrow. And that is very crucial, because if we don't know that, we will certainly not be as effective and efficient in reaching our goals. So by breaking down those goals into smaller steps, smaller targets, we make it more measurable, first of all. We make it more specific, achievable, realistic, and timely. And that's basically the SMART goals, if you take every first letter. That's what goals should be. And when those goals are specific, measurable, achievable, realistic, and timely, then we know, if we're on the right track. At the end of this week, I want to have finished this course on Fibonacci. At the end of next week, I want to have finished the first half of that book. I want to look 10 hours per week at the market, at live market action. These are clearly measurable goals, right? And this will basically keep us on track on gaining the experience and the learning curve. So we can have, of course, a lot of goals, not only on education and charting experience, but quite a wide range. Some of these targets will be not reviewed that often. Motivation targets is something that I don't think has to be done more than once a year, in my opinion. That's something that could be on a yearly basis. Income and expense targets, I don't think that has to change that often. I mean, that's also something that, you look at once in a while and maybe once a quarter or once in 6 months. I mean, I don't think that has to change all too often. Same for investment and income targets. These things are quite long-term. Health, social, sport, mind, spirit targets, that you want to achieve yourself. So these are, of course, all not so much connected to trading. Regarding trading, we can think about improving ourselves in trading method, getting educational goals in improving on trading psychology, and optimizing the trading plan. So, for instance, with the rules that we want to formulate, we could specify that we want to formulate the rules in the next 4 months, and that we will do after that periodic updates of the rules that we find relevant, so that it doesn't become a stale document. We want everything we create to be useful. Things like, for instance, number one focus is capital preservation. Plan to trade and trade to plan, kind of like small slogans that are examples of rules that help us keep focus on important things when trading. Always use a stop loss. We can hang it above our PC, for instance, and one of the rules or one of the targets we can say is that we'll never break one of these rules when trading Forex. That's the target, right? Or we allow ourselves one time to break it in 6 months, because maybe, if you really want to be very precise, for instance, depending on how heavy the rules are. These are all rules that are generally recognized as important. Always use a stop loss, always predefine your risk before entering a trade, always focus on the process, not on the outcome, always complete evaluations, keep an eye on your emotions, try to execute the trade without those emotions. These are all very important things, easier said than done, but ultimately when the experience kicks in, we will get to that stage that they not only become words, they not only become concepts, but we actually use them. We actually stand for them. We are these rules, right? Instead of kind of like having them vaguely in our mind or once in a while looking on the sheet. No, we know them. They are us in a way. That takes time. Now, these bigger targets we can even split into sub-goals. I don't want to bore you too much with this, but basically just anything that seems quite big, in anything that seems like, okay, I have to finish this course by the end of next month. Well, that could be good, but that doesn't help you from a day-to-day perspective. So what you want to do is split that goal into smaller parts. Okay, I'll finish part 3.1 today. I'll finish part 3.1 till 3.10 within this week, for instance. That's how you want to split that into more doable things that you want to keep an eye on that. You want to evaluate that if it's achievable and if it makes sense, and it has to still be realistic as well. And one thing you can do is really make it like a challenge for you. Of course, you don't want to make targets too easy. You want to keep them balanced though, and set up rewards for yourself. If you reached it, great. Give yourself a night with, go out with friends as a bonus or something like that, whatever you want to create. Then point 6, action, action, action is very important. Talking is all good stuff, but ultimately the key, I think, in my opinion, to driving tasks and things we need to do and things that are important to understand and things we want to achieve in is action. We have to really start. We don't want to postpone too much, right? If we say, okay, next week I'm really going to take a look at the markets. I'm really going to start following this strategy very, very rigorously. But if we don't do it then, and we don't look at the charts when we come back home and say, okay, I'll do it tomorrow, we're not really, we're delaying success. And the only thing that really can lead to that is taking that action, is taking the mental kind of step to force ourselves to that barrier. That barrier is kind of the routine in a way. If we're used to kind of postponing things and used to saying, okay, I have that in mind, but okay, I'll do that another time. We want to really force, kind of break through that barrier and say, okay, not now, today I'm really going to take that extra step, take that extra 100, put in that energy to make that, to do that action, to take a look at that market, even though I'm tired, right? To make things more alive, and when you push through that barrier, then it's also easier to do that again. It kind of energizes you. It makes everything a bit more lively. And then after, I think someone said after 20 times, I forgot 24 times of doing things day in, day out, or at least regularly, it becomes a routine. I forgot the number, unfortunately, but it was, you got to do it like really a good number of times. It was either 15, 20, or 25, something like that. It was 20. 20, now I remember. So when you do that 20 times, then it becomes a routine, and nothing below that number qualifies for routine. So that means when you start out with a fitness program, if you start out with swimming during lunch times, no matter what you do, you got to do it 20 times, otherwise it's not a routine. And if you stop before that, the brain doesn't recognize it as part of something that's naturally part of your activity, and you will lose that kind of work you have put into it. So you need to reach that level, and of course, that's when the brain, well, I'm not saying that then you should stop, but the brain at that point, when you do something 20 times in a row, recognizes there's some kind of, and it's difficult for me to explain it because I'm not very, I'm not an expert in this brain and the mind, but at that point, something in the brain clicks and it recognizes it a routine. That's what I've heard. So routine is important because it leads to this consistent action. It leads to this pattern, basically, that we can focus our energy on the markets. So we have that routine to support our to support the achievement of our targets. Alrighty. What we definitely want to avoid is that we have kind of a spike in interest and then nothing. This up and down is something that a lot of people have. A lot of interest, no interest. A lot of interest, no interest. A lot of interest, no interest. This kind of yo-yoing, going back from extreme to another extreme. At all costs, do we want to avoid this? Rather choose a lower level of intensity, but regularly, than try to achieve a high level of intensity, but fail and rebound and fail and rebound. Go for the lower one, but consistent. It's much, much more valuable. The spikes, the yo-yoing from one to another is not good for the learning effect for reaching targets. Oh, sorry about that. Just give me somehow lost my moment here. So daily routine, very important. Some say that the daily, what we do during the day, kind of like, what is our routine is ultimately the kind of success we could expect. So when to start in Forex? Well, I think that education and learning, we could do it now. Anyone who, even if you've picked up your first book today, that's something that everyone can do immediately. Books, courses, videos, starting with the basics and then moving on to more advanced. But besides the kind of one-way stream of information that books, courses, and videos are, I think it's good to also discuss it with peers, right? Talk to other traders, because I think that interaction also is a big learning effect. Listen to mentors, and eventually actually talk to people who just started trading and tell them your experience, because that interaction also kind of solidifies and amplifies all the learning. Experience, very good to start demo trading, then eventually maybe start with small risk trading. Make screenshots, keep those screenshots, take a look at those screenshots 1 week from now and see what did you think then and how does the chart look like now, so you can compare your analysis and learn from that. And also eventually, when you feel comfortable enough, share with others, because with that interaction, by kind of being forced, or not forced, but internally being forced, right, to kind of put you in a position that you want to show your analysis, and by doing that, by sharing it with others, you are actually learning. Most people are shy to do that. Most people feel uncomfortable, insecure with doing that. By doing that, it forces, in a way, the process forces you to kind of come together here with an analysis that is coherent and can be explained to someone else. If you are alone, you're not forced to do that. You can kind of stay in a framework where you have all kind of thoughts, but don't pull it together. When you have to show a screenshot to others, when you're sharing with others, you have to formulate your analysis, formulate what you're looking for into a coherent presentation, kind of in a way, and that process, I think, is good. So I think sharing is very good with traders you trust and like, and it could be a very fun process. And I think it's an important process for learning as well, and a needed one eventually. It doesn't have to be right away, of course. Then eventually, obviously, live trading. When live trading, there always the question about, when do you want to trade, at what point, how much capital, and it really boils down to the entire kind of income, expenses, and trading capital balance. I mean, obviously, if you have, if you're saving a lot of capital at this moment, if you're saving a lot of funds, if you have a lot more income than your revenue, then you can increase that trading capital more. That will have an effect. If that's not the case, then you want to probably be more careful from switching from part-time to full-time. Want to maybe focus more on higher time frames, and first of all succeed in making some profit on the longer stretch. Everyone wants to have some profit, obviously, before moving to more intensive, more intensive in the sense that you're more dependent on income from trading. At the very beginning, you don't want to have that. You want to make sure that the income exceeds the expenses without trading. And slowly that balance can change, that can alter. But we need experience with that. We do need a proof of that to ourselves, that we could slowly shift that burden. Perhaps you find out when you do analysis that you can live without certain expenses, and you can therefore conclude that you require less income. Maybe you can find a work that is not full-time but part-time and do the other part-time trading, for instance. These are kind of things that may be options for you depending on the country culture that you work in to think about when tackling this question. But typically, the trader starts with higher time frames, starts with gaining experience first of all, and after that is done, can think about setting targets that are aiming for a certain positive rate. If that is achieved, for instance, like just gaining 10% in a year, for instance, very modest targets, even 5 just being break even at the very beginning, and from there grow to where the trading is becoming more important. We want to keep an eye on mental capital, not only trading capital, because we also want to be able to support it from a mental point of view that we can handle the pressure that might occur with the decisions we make on how intensive we trade. We can't underestimate that. We don't want to, the more burden there is on the income side from trading to cover expenses, the more tougher that is, and that's something you don't want to underestimate. All right, that's that burden to have a pressure to make a certain target is not something you want to neglect. So you got to keep an eye on that. All right, that's it. And then it's going to continue now with a lot more good stuff to come. So I'll pass it over right now.
Thank you, Chris. Great presentation as always. So I will be ready to continue now. So when to start in Forex market? First thing, many would-be traders ask themselves, will I be free? Will I have some sort of freedom if I engage in that adventure? And many of the traders are instantly thinking about having some sort of financial freedom. And I need to tell you guys, they are pretty much right, because financial freedom is basically the biggest freedom you can ever have in your life. And today, you see what happens today across the world, all over the world. There are no wars as we had wars in previous times. For example, Second World War, First World War. Today, war is all about economical stability. If strong countries want to make someone, let's say, a lot obedient and more obedient, and they, for other reasons, want to punish them, then they will use they will not use force. They will use basically a financial, some sort of breaking financial freedom. And financial prison, I thought meant financial prison. Prison is the worst prison where you can ever be trapped. The thing is, if you're not financially free, your girlfriend will not love you. Your father and mother will always have some objections. You will always be some sort of person who is actually want something from someone. And you will be always asking for loans. You will be always asking for more, whatever. You won't definitely be free. Financial freedom is of the utmost importance to every single person. To be financially free means to be basically free in your life. So you can do whatever you can with that amount of money you basically have for yourself and your family. One of the reasons, I think that is the primary reason for becoming and when to start in Forex trading. It's not just about being financially free. You can work for a company, of course, and be financially free. You will just depend of your company revenues, of your boss attitude towards you, but that is all connected to day job. So basically, again, day job is something you need to work every day. You need to go visit your office every day. You need to work with same people each single day. So sometimes it can be very stressful. Sometimes days in office, at the office, are very hectic. Sometimes you're just full of everything and you definitely don't want to take part, especially if you work with people. It's very, very, very hard to do. Some people prefer it because they want to do something different. They want basically to do something that many other people don't love to do, and basically they want to be someone who is more than just an average Joe, as we say. So do something different. Maybe some of you, well, I can say maybe I'm in this group, connection to similar job. Of course, financial freedom is always at the first place, but the connection to similar job, because I worked with some hedge funds prior to my Forex trading career, and there was definitely a sort of connection to that kind of job, but although it's different, it was somehow connected in one sense, in a sense. Technicalities is also, I can say, one of bigger drivers to start Forex careers, because if a guy or a girl or a person or whatever, a man is technically capable, he will do technical analysis easier. I know that personally, because I was very, very fond of technical science, and when I started doing Forex trading, technical charting was really, really easy for me. So basically those technicalities and those texts which we were connected prior to our Forex career have a lot common to do than we knew. So a person who is really, I can say, more than technically based for this kind of job will have more success in technical analysis than, let's say, a person who loves to teach history. That is the thing. I know many traders who are basically who did all other jobs except trading, except having financial knowledge. I know a person who is a good Forex trader, and he is actually a psychologist. So having connections with something different, which is much similar, is also very helpful. Psychologists, and even people who are not so-called psychologists, but they have studied psychology on their university, are very, very good and can be very good traders, because they already have knowledge in their respective field, which will be very useful in trading Forex. Yeah, that's completely the truth. I was also, as I said, I was connected to some hedge funds before I started trading, and basically I knew some things which hedge fund traders do before I started trading Forex. I didn't know much about technical analysis, but I learned it through time, because I was really technically, I can say, inspired to do, and I was really inspired to do some technical trading, because that is what I love. I love this, and I really enjoy every single moment, even when I lose. You know, when my wife and some friends ask me, do you ever lose? Of course I lose. That is the part of your career. You have your wins, but you also have your losses. But even when I lose, I love to lose, because this is what makes us winners ultimately. Believe me, that's the truth. It sounds a little bit paradoxical, but paradox is always the truth. Paradox is the truth. When we basically learn to lose, and when we accept losers, we ultimately will be winners. And that is the always, because we are not afraid of losing. Only losers are afraid of losing. Winners are never afraid of losing, because they know that that's the part of the job. Remember this, what I'm saying to you. Okay? So, things you should know before you ever start to do Forex career. First thing is, you don't want to be one night millionaire, guys. Okay? You don't want to be one night stand millionaire. You won't be even a millionaire in a couple of years probably. But if you really start to trade with the hope of becoming rich quick, you really need to reconsider this decision entirely, really, guys. The thing is, there are too many factors you cannot control which have really a key role in how much you make. The thing is, if someone tells you other things that you can become a millionaire during only a single night, then probably they are trying to sell you something or to mislead you. It's not about one night millionaire wish. It's about the journey, guys, not the destination. It's about the journey. You need to focus yourself to be long distance runners. As I always say, Forex is a fast-paced marathon and you are a long distance runner in that marathon. You need to know that this is a journey for your lifetime, for your career. It's not about making money. It's a lot more than that. It's a journey that gives you a better chance of using previous learned lessons to create profits. Lessons which you have learned before you ever start thinking about Forex trading. You want to learn, guys. You always want to learn, and you will always learn until you basically retire yourself. Even then you will learn. You will keep learning. Forex is not something you will learn once and become master of it. Guys, financial world always changes. 10 years ago, Forex trading was different. A year ago, we didn't know that SMB will unpeg euro. Financial world will always change. But with the change of Forex world, with the change of financial world, also Forex world changes. If you're not willing to stay updated, keep learning, and continuously expanding your knowledge, you will be struggling to keep account after account. You need to keep your mind open. Keep it simple. Keep it simple, stupid. Keep it simple, sir. Keep it simple. KISS principle. Don't make trading harder than it has to be. It's not difficult. But if you are stacking 10 indicators on your chart, you're basically making trading harder than it should be. Keep it simple. Why should be complicated? Why should be even a little bit complicated? No, it doesn't need to be complicated at all. It's always simple. Always simple. Even about money management is simple. Your risk is always predetermined. Many people ask me, what if I use 10 pip stop loss versus 100 pip stop loss? If your risk is 0.5, your risk will always be 0.5. No matter how much of a stop loss you use. Okay? It's money making money. If you want to trade, you need to have money to deposit. Yeah, there are bonus campaigns which are actually very good, and I will talk about why bonuses are good and why you should always consider having a bonus. But that's money. Money makes money. Okay? Always remember that money makes money. You as a trader will make money out of money. Then maybe also what is important is you're maybe a lone wolf. So you work well alone, And most people are not as self-motivated as they think or self-disciplined, but true traders are. True traders are like lone wolves that can spend hours of hours on that alone as they learn and develop their skills. Okay? It's up to you to put all your effort into becoming a proficient trader. And it's up to hold yourself accountable. If you're someone who requires hand-holding always, constant reassurance about every step in Forex, or simply you need a boss to guide you, forget about Forex career. Really, guys, forget about it. If you're not leaders, if you're just followers, if you just need a boss to guide you, that's not for you. And now I'm not saying that you shouldn't follow me or Chris, because we are here to help you. You shouldn't follow people who will always tell you, do that, do that, do this, do this. You are not worthy. If you lose, that's stupid. Even if you lose, you will still learn from your losers. You will still learn from your losing trades, from your losing streaks. Because you are not afraid of failure. I already told you, you need to accept failure if you want to become a winner. Only winners accept failures. Losers are afraid of failures. You are not afraid of failure. You are not a loser. All traders, most profitable ones, go through a losing period. A fear of failure will simply hold you back from consistent profits. You need to be emotionally strong, guys. You need to be emotionally strong, stable, highly calm, stable people are really having a good success with a psychology assessment in Forex market. If you're not calm, then try to practice something. For example, I really love martial arts. And it really keeps me calm. And when I go and punch the bag, I really feel it's calming me down. It's making my breath, my heartbeat go louder and louder, and I really feel good. I feel good when I run. I feel good when I do shadow box. I feel good when I'm with my friends. If you are not into it, then go with meditation, go with yoga, go with some visualization exercises. Try to listen to binaural beats. If you don't know what binaural beats are, go to YouTube and spell it, binaural beats. Maybe it will help you. The point is that your mind and your brain should be aligned to a certain frequency. The best frequency for you and yourself is the earth frequency, earth spinning frequency. You need to be aligned with this world, with yourself, with your mind. And if you cannot achieve that, if you are constantly smoking cigar after cigar and drinking coffee and whiskey while you trade, that's not a job for you, really. That's something you should definitely consider to abandon. Always be emotionally strong and always do whatever calms you, whatever keeps you strong. Stand apart from the crowd. You need to be definitely other than average Joe. Do your own stuff, do your own trades, have your own way of trading. Have your own way of placing stops and profits. That will definitely stand apart from the crowd, stand you apart from the crowd. And by doing that, you will still stand apart from the majority of your friends, because most of your friends simply do not know that Forex exists. You're still, because you know what Forex is, and you know that you are a trader, you're still in a big advantage over them. Unfortunately, they don't know, and they are average. You're above average. you stand apart from the crowd. And when you start to trade, you should always have in mind your financial goals. Your financial goals are something which will definitely be your own and yourself only target. It's you and yourself and no one else. Your financial goals. Always watch for regulated broker. What did I tell you many times? What happened when S&B dropped the currency, unpegged euro from their currency? Many brokers who were unregulated were broke. Many brokers who were regulated were broke. But when firm knows how to keep money safe, when a firm has a license, when a firm has liquidity providers, and when firm gives you bonus campaigns, that firm you should stick to. And so far, Admiral Marquez has done an exceptionally good job for these points. Now, I use this opportunity because many traders asked me in the past, well, okay, let's say that I want to enter a Forex market, and those bonus campaigns, why are they useful? Isn't that something that brokers want to take advantage of you? I need to tell you, you will probably ask yourself, what is the deal with brokers offering an extra 30, 40, 50% for each deposit? Guys, a deposit bonus is a reward that brokers extend to traders when they want to deposit funds to their account. In a near perfect world, it's a win-win situation for both the broker and the trader. Okay? And again, this stands true if that service provider is regulated and hasn't been spotted engaging in shady activity. It's the reward for the brokers, because brokers then achieve higher trading volume and potentially obtain new client. Reward for traders is basically extra funds on their account for their loyalty. In my opinion, bonus is good as a credit line or an extension of the capital. It's an increase of the margin level. It serves as an extra cushion protecting against more rapid account drawdown. Okay? So when you clear all of these things, having a deposit bonus added to your trading account can do a great deal of help you by increasing traders' total margin. Okay? That is called increasing the total margin, expansion of trading capital. So this is actually a good thing. It's good for you, it's good for the broker. Okay? It's a normal thing, and only good brokers can give you bonus. I'm not necessarily saying that each good broker will give you a bonus, because you don't know which broker is regulated. You don't know where you put your money. Your money should be safe always, guys. Remember that. Because if you use that extended capital, you are effectively increasing margin and protecting your account from a bigger drawdown. That is good for starters. Stages which you will go through, we already mentioned this, I will be quick with this. You will become first a rookie trader, but then obviously during a couple of months or half a year you will become a developing trader. And when you start to be developing trader, this is the most important thing is, you will realize that Holy Grail lies in yourself. Then you know what we talked about. You will go to part-time trader, consistent trader, and definitely you might become an expert or full-time mentor. Now you probably ask yourself why I'm mentioning this. Because guys, this is also what a trader aspires to be when he or she starts his own trading career. This is your aspiration. From being an average trader over part-time trader to being a good, profitable trader and to being an expert or mentor, full-time mentor. This is what your goal should be, at least consistent trader. You don't have to be expert. I love to teach. I really love to help people in this kind of business. And I'm very satisfied when I see that people made money from my analysis and from session recaps and from trade advices. That keeps me happy, really. And the thing is, that is always that's also connected to my first point when I said what things keep you calm. It keeps me calm when I see that a trader has been successful. Only a jealous, foolish person can be very jealous to a trader who wins. Only a jealous and selfish person can grow such kind of feelings. And finally, guys, you need to make your decision. Decision is always important. But it's not just about making the decision. You need to feel it. You need to know that it's real. You need to know that it's definite your decision, and that no one can stand between you and your decision alone. Don't let anyone disturb you. If you plan to invest $10,000 in Forex, do it. Do it. Do not be afraid. Investment in yourself is always highly profitable. Okay? Always highly profitable. The biggest investment today is in yourself. A famous scientist and teacher, John Nesbitt, said that today in this world, modern world, the biggest investment is in yourself. So guys, we are here to help. Follow us, and always remember, when you start to trade, when you start to make a deposit, whatever, open an account, or you are a trader, you are not alone. Never ever forget it. You are not alone. We are here to be and guide you through the currency and through the currency of Forex trading. So guys, this is everything we had for you today. I hope you enjoyed this little presentation. We will be here, of course, with you very, very soon. Sign up for more interesting webinars, and definitely do not forget to follow our analysis, because now the time is volatile and there is momentum in Forex market, and there is really a lot of good setups which we will try to exploit this next couple of days. And yes, thank you for Forex Street also. Yeah, I know Forex Street webinar was also good. Thank you guys for heads up, and I will talk to you soon. As always, cheers and trade safe.